Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Omni, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like ADC, Omni puts the global market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 450 assets to choose from, they've got the largest crypto selection in the region. Want to automate your investing? Just set your monthly budget, choose your preferred categories, and let Omni do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless. You can now deposit crypto directly from your wallet. And if you get stuck, Omni offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Omni app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Now, let's talk about Startup.oi, a global tech platform transforming how engineers connect with opportunity. They offer high-paying, remote tech jobs that give you complete flexibility in location and working hours. On top of that, Startup.oi hosts free global events, meetups, and tech talks designed to help you grow your skills and network with other professionals across the world. What makes them stand out is their commitment to community, especially in emerging spaces like blockchain, Web3, and the metaverse. Whether you're just starting your career or you're a seasoned dev looking for the next opportunity, Startup.oi gives you a platform to learn, earn, and grow. You can download the app from the Google Play Store or Apple App Store, or just click the link in the show notes. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. We're here to cut through the noise and get straight to the insights. And today, well, we've got some really striking news to unpack. Bitcoin, it's dramatically crossed the $120,000 mark. This is as of July 14th, 2025. We're seeing reports around $121,463 specifically. So our mission in this deep dive is really to explore, the interconnected factors driving this surge, and also look at other big developments in crypto and AI as well. We've pulled together a stack of sourced reports, analyses, trying to give you a clear, comprehensive picture, what's happening, why it matters, what to keep an eye on, and importantly, there's a critical piece of the puzzle coming tomorrow. That's the macroeconomic inflation data. Its anticipated slowdown is, well, it's already making waves, influencing market sentiment and big Federal Reserve decision later this month.
Yeah, it's pretty remarkable how quickly the market reacts to these macro signals, isn't it? The anticipation around tomorrow's inflation data is huge. Reports are strongly suggesting a slowdown, and that's directly fueling this Bitcoin surge we're seeing. If inflation does cool off, well, a significant pump in Bitcoin's price is widely expected. And for anyone listening who wants to check this data themselves, the official source is the Bureau of Labor Statistics. That's www.besals.gov. This isn't just about Bitcoin. I mean, it's about understanding the bigger economic currents.
Absolutely. So Bitcoin at $121,463 jumped over 3% just in the last 24 hours. That's significant. And that inflation connection you mentioned, it seems absolutely central right now, especially with Federal Chair Jerome Powell's decision coming up July 30th. He has to decide, right? Reduce rates, keep them the same, or maybe increase them. Sources seem to indicate it increases. Well, unlikely, high probability they stay the same.
Yeah, that seems to be the consensus. An increase feels off the table for most observers. Keeping rates steady is seen as the most probable path. But, looking at the wider implications, keeping rates steady might not please everyone. President Donald Trump, for instance, has publicly said Powell is not the right person for the role. And apparently he would definitely not be happy if rates don't change, which is, well, quite a contrast to last year, right? When Trump actually reduced interest rates before the election, even though the economy wasn't perhaps as strong then as it seems to be now.
Interesting context. So the current economic picture is different.
Quite different, yeah. The U.S. economy added, 147,000 jobs in June? That actually beat expectations. And unemployment's holding relatively steady. So, stable job growth. Plus, you've got Trump recently extending those tariff dates to August 1st from July 9th. That's been seen by some as giving the economy a bit of a breather. And, observers have noted inflation has consistently gone down under his administration, with the tariffs reportedly having no negative impact. That's the narrative anyway.
Okay, so connecting the dots for the listener, what does this all mean for you? Basically, if inflation is going down, it suggests a stronger U.S. economy, which could mean more spending, maybe on assets like Bitcoin.
That's the general line of thinking, yes. More capital available for investment. Conversely, if inflation were to pick up unexpectedly, well, that could signal a downturn for Bitcoin prices. It's a pretty direct correlation people are watching, why these macro signals are so crucial.
Right. And just the usual reminder here, of course, these analyses, they aren't financial advice. Always do your own research.
Definitely. And this leads us nicely into market sentiment, actually. It's currently rated as great, sitting at 70 on the sentiment scale, which is pretty strong. What's driving this? Well, it seems to be high net worth individuals, big trillion-dollar companies. They're anticipating this slowing inflation and are actively trading ETFs. And the ETF inflow numbers are just staggering. A record $1.23 billion in the last 24 hours alone.
Wow, $1.23 billion. That is a massive influx. Paints a very bullish picture, doesn't it?
It really does. And it's not just a big number in isolation. It signals, I think, a fundamental shift in how global capital sees crypto.
But okay, let's play devil's advocate for a second. Is there any risk this is, maybe overblown? Too much focus on just one factor, like inflation?
That's a fair question. Speculation is always part of the market, right? But the sheer scale of these institutional inflows, the $1.23 billion figure, It suggests something more calculated, a deeper conviction perhaps. Think about how different this feels compared to, say, times of geopolitical stress, like that attack in Iran period mentioned in the sources. Back then, we saw negative ETF flows, money leaving. Bitcoin dropped below $100,000 then. So this current inflow, it really highlights the positive impact when global tensions ease off a bit.
Okay, makes sense. So zooming out again to the broader crypto landscape, where do things stand overall?
Well, the global crypto market cap is currently $3.87 trillion, getting closer to that $4 trillion mark, but not quite there yet. Total crypto market volume in the last 24 hours, around $154 billion. That was as of early morning, July 14th, so it could potentially climb towards $180, $200 billion.
And within that, what about the decentralized side, DEXs?
Right, DXs, decentralized exchanges. Their 24-hour volume is about $14.02 billion, so a smaller slice compared to the overall market. But here's the interesting part. The total fees they've accumulated, it's remarkably low, around $80.5 million. That's only, 0.60%. It really showcases the efficiency of these platforms, processing billions for tiny fees.
That is efficient. And total value locked, TVL.
TVL sits at $127.8 billion right now. That's the value staked in DeFi protocols. And there's potential for that number to really pump up, especially if big treasuries, like, say, from Ethereum or Solana, reinvest funds into becoming validators. DX dominance is currently at 41.44%. And real-world assets, RWA TVL, that's holding steady at $12.94 billion, shows consistent interest in tokenizing tangible assets.
Okay, digging into those DXs specifically, who are the big players by volume?
PancakeSwap is leading the pack by a significant margin, $5.92 billion in 24-hour volume. Then you have Uniswap at $2.08 billion, followed by Radium, Meteor, and Zorka with smaller but still substantial volumes.
And stablecoins, they're the bedrock of a lot of this trading already.
Absolutely. USDT, Tether, is still the giant, $100 billion in volume, just dominates. Circle's USDC is next at $10.87 billion, and then FDUSD at $10.63 billion, which interestingly is a bit lower than usual for FDUSD.
And overall market dominance, still Bitcoin's game.
Very much so. Bitcoin dominance is at 62.41%. Ethereum's is quite a bit lower, 9.51%. Market caps reflect this. Bitcoin at $2.43 trillion. Ethereum's seen a nice pump, though, up to $368 billion. In trading volumes, Bitcoin did $64.23 billion in 24 hours. Ethereum about a third of that, $23.89 billion.
What about the treasuries held by these crypto projects themselves? Who's holding the most capital?
Yeah, the protocol treasuries. Uniswap leads there with a hefty $3.2 billion. Then Mantle Treasury at $2.25 billion. Arbitrum, $1.59 billion. Cardano, $1.33 billion. And Optimism Foundation with $1.28 billion. These are huge sums. And often, they're the source for grants, funding development within their ecosystems.
Okay, so we've seen the market dynamics, the big money flowing in. Let's shift gears a bit. How is the next generation learning about all this? Education seems key. The University of Austin is doing something interesting, right? A dedicated Bitcoin curriculum.
Yeah, it's quite pioneering. Founded by people like Bari, Weiss, Neil Ferguson, led by Dr. Thomas Hogan. And it's not just textbook stuff. Students get hands-on experience, setting up wallets, using the Lightning Network.
Lightning Network, that's for faster, cheaper Bitcoin transactions off the main chain.
Exactly. They even get access to mining equipment. And the university itself has a Bitcoin endowment, held in self-custody with Unchained capital. Started with just a 2 Bitcoin donation. They also hosted an event, the Satoshi Papers, focusing on academic debate about Bitcoin's impact on society.
That sounds really comprehensive. The sources mention, a listener asked if more universities should do this. What's the take?
The answer seems to be a resounding yes. It's seen as critically important. Educating people about Bitcoin, especially from an early age. Understanding money creation, Austrian economics, principles. Bitcoin aligns with, sound money, limited government.
So understanding the why behind it, not just the how.
Precisely. And we're seeing initiatives pop up to break down Bitcoin concepts for different levels, beginner, advanced, technical, targeting not just students, but politicians, high net worth individuals, even government organizations. And the argument is strong, focused specifically on Bitcoin, not just generic blockchain technology, because Bitcoin is the one that's truly distributed, decentralized, and directly competing with traditional fiat currency.
Makes sense. So if education is growing, and institutional money is flowing in, who actually holds the most Bitcoin right now in 2025? There's a Cointelegraph article, the Bitcoin Rich List, that sheds some light.
Yeah, it gives some fascinating insights. Let's look at exchanges first.
Right.
Binance is way out in front, holding around 248,600 BTC for its users. Then Robinhood with about 140,600 BTC. Bitfinex is up there too. There's also a Binance Cold wallet with 111,000 BTC. And interestingly, a government-held wallet from the Bitfinex hack recovery with nearly 95,000 BTC.
So huge amounts held custodially by exchanges. What about corporations actually putting Bitcoin on their balance sheets?
That's where MicroStrategy just dominates. They hold a staggering 597,325 BTC, miles ahead of anyone else.
Wow, setting a real precedent.
Absolutely. Then you have companies like 21 by 21 Capital, Metaplanet, Tesla, Block, holding significant but much smaller amounts. And remember, Bitcoin transactions are public, but MicroStrategy, for example, hasn't publicly linked its corporate holdings to specific addresses.
Right, and beyond direct corporate holdings, we have the ETFs and trusts.
Yes, huge players there too. Grayscale Bitcoin Trust, GBTC, holds about 292,000 BTC, and BlackRock's Bitcoin Trust, IBEAT, isn't far behind with 274,000 BTC, shows massive institutional adoption through traditional finance rails.
What about countries? Are governments holding Bitcoin?
It's harder to track definitively, but the data suggests yes. The U.S. government holds some, around 27,000 BTC, likely from seizures. China is listed with a very large amount, 194,000 BTC, though the nature of those holdings might be complex. The UK, Ukraine, they're significant holders too. And the surprising one is Bhutan, listed with almost 12,000 BTC, reportedly from silent mining operations.
Bhutan. Okay, that is unexpected. And individuals.
Yeah.
Besides Satoshi, obviously.
Well, Satoshi Nakamoto's estimated hoard is just legendary, somewhere between 968,000 and 1.1 million BTC, untouched since 2010. A massive dormant supply. Then you have known figures like the Winklevoss twins, holding around 70,000 BTC. Tim Draper famously bought about 30,000 BTC from a government auction. Michael Saylor, personally, separate from MicroStrategy, holds a significant amount too, over 17,000 BTC. And there's always a bit of mystery, like one wallet holding nearly 80,000 BTC with an unknown owner. Of course, these numbers are always shifting, especially as prices change. And we might see more governments, maybe like Saudi Arabia, becoming active buyers.
Okay, fascinating snapshot of who holds the keys, so to speak. Let's pivot now to stablecoins again. Tether made a big announcement, right? Stopping USDT support for some older blockchains.
Yes, exactly. Big news for users on those chains. Effective September 1st, 2025. Tether is ending USDT support for 5 specific blockchains: Omni, Bitcoin Cash, SLP, Kusama, EOS, and Algorand. They're calling them legacy chains.
So, crucial information for you listening. If you hold Tether USDT on any of those 5 chains,
you need to act. Redeem it or move it to a supported blockchain before September 1st. Otherwise, Tether says the funds could be frozen or they might forcibly convert them to other assets. So don't delay their official reason, a strategic infrastructure review, basically saying these chains have declining usage and they want to focus resources elsewhere on more scalable, active blockchains and, importantly, layer 2 solutions.
Right. This move definitely sparks that debate, doesn't it? Centralization versus community. It's Tether's decision, centralized entity. But should the community have more say in stablecoin infrastructure?
It's a tricky one. Stablecoins are centralized by nature, backed by reserves managed by a company. It raises the question, are these issuers becoming like new digital banks?
And if so, maybe they need stricter banking-like regulations.
That's certainly part of the discussion, especially when you compare them to, say, algorithmic stablecoins. Algorithmic ones faced huge backlash, got rejected in places like Dubai in the US after the Terra Luna collapse. Yet some people still believe they are the true future for peer-to-peer stable value transfer, precisely because they aim to be less centralized. It's an ongoing tension.
Okay, shifting from crypto infrastructure to another area of rapid innovation, AI, particularly in the Middle East.
Yes, there's some really interesting stuff happening there. Let's look at Abu Dhabi first. There's a prop tech startup that's property technology called Evos. Their ambition is huge. Revolutionize real estate using predictive analysis. They built a platform covering the whole development lifecycle: planning, pricing, sales, CRM, all in one place.
And this is in a hot market, right?
Yeah.
Abu Dhabi real estate saw massive deals in 2024.
Absolutely. $96.2 billion in deals. Some projects selling out in under 48 hours. It's booming. So what Evos is doing with predictive analytics is pretty cool. They analyze buyer preferences, browsing trends, even social media sentiment before a project launches. The goal is to replace guesswork with data, figuring out the optimal mix of units, the right pricing strategy based on real data.
That sounds much smarter than just going on gut feeling.
Exactly. And they have a multi-language AI agent too. qualifies leads 247. It focuses on having personalized conversations, aiming for high conversion rates, and it integrates directly into developers' websites so they keep control of the brand and, crucially, the data. The platform apparently has a data mode that learns and gets better with every single buyer interaction, and it's got solid backing. Quarter 71 led their seed round. It's a really focused application of AI.
Very impressive. And it's not just Abu Dhabi. Saudi Arabia is also pushing hard on AI infrastructure.
Yes, big time. The Kingdom of Saudi Arabia, KSA, is collaborating with Cisco. They're focused on developing advanced infrastructure, specifically GPU as a service.
GPU is a service, so providing cloud access to those powerful graphics cards needed for heavy AI work.
Precisely. Making large-scale AI development more accessible and scalable. Cisco is providing the end-to-end solutions, the networking, security, the whole package for high-performance AI development.
And this fits into their bigger national plan.
Absolutely. It's directly linked to Saudi Vision 2030. Their goal is to become a global hub for digital innovation and AI. In this partnership, KSA brings the local market knowledge, the investment strategy. Cisco brings the global tech expertise. They're also focusing heavily on training, upskilling local ICT professionals, building a talent pipeline. It's a major strategic push and aligns with other big deals we've seen between the U.S. and the Middle East recently. Things are moving fast there.
Okay, so as we start to wrap up this deep dive, quite a journey we've taken. From Bitcoin soaring past 120K, driven by macro factors and big institutional money, through the changing landscape of crypto education, who holds the wealth, to Tether shaking up the stablecoin space, and then this huge AI transformation happening in the Middle East. It really shows how interconnected all these things are, doesn't it? Shaping our digital and financial future.
It really does, and maybe that leads us to the final thought for you, the listener, to ponder. As these lines keep blurring between traditional finance, digital assets like Bitcoin, and these powerful AI technologies, what might be the next unexpected intersection, the next combination that reshapes things? And maybe more importantly, how prepared are you to navigate whatever comes next?